we're just going to go over what I missed this morning and the trade that everyone caught that I don't know, not in the right mindset still, but let's go over it. So this morning on the 1 hour, we have this right here. This is the new week opening gap that we've been retracing back into, bounced off, and then we finally filled it last night, Tuesday night. We came down into this sort of area right here, this kind of consolidation area. So we tapped into that, bounced off of the, what is this, New York or London low into Asia, and then came back up. When we came back up, we created a 1 hour gap right here. So you would have been able to take a long right here. This is at 4 a.m. because it's a break out. So potential long right here at the break of the 1 hour. But coming into this morning, let's just drop down to the 5 minute. So this morning, right here, this is 6:30 a.m., so 9:30. We can see we tapped back into the 1 hour, bounced off of it, kind of bounced around for 15 minutes until we decided to pump up, breaking above New York highs, and into this 5 minute. So this 5 minute was created over here on the way down, and so we can see that we are, having a break out of this trend line, and this is also an SMT right here. So this is good signs for bullish momentum upwards. But the trade was right here. So that, what I just deleted, was the NWOG. So we broke into 50% of NWOG, broke up, retraced back down into the 50% area of this gap right here, and then went higher. But the trade was on this 5 minute gap. This candle right here was, I don't know, like 40 something points. So if it's over 40 points, it's a valid gap. So we used this as our entry to target higher. So it would have looked like this for longs right here, boom, targeting, wherever you feel comfortable. 30-point stop loss, so something like this. And yeah, taking longs, you could target like right here, right here, right here, right here, wherever. Let's just say we're targeting this one right here. Boom, these highs. And basically it got hit right here at 8:55. So this would have been at 6:55, so 2 hour trade, depending on however long you wanted to hold it. But in order to reach TP, 2 hour trade for a 1 to 5.5. Right? You also could have entered in down here in this sort of chop. Don't recommend, but you could have done it on the 1 minute. So we can see price came down, bounced off the 1 hour. Bounced off of the 1 hour inside of this sort of unfilled area. Bounced off of that and creating a 1 minute fair value gap right here. So with this small little 1 minute fair value gap, let's just do this. Fair value gap. Right, so we had this 1 minute fair value gap breakout. Did a little retrace, but whenever I'm trading the 1 minute, I like to put my stop at the lows because it's a smaller time frame. So I've done the same thing, targeting highs, stop at the low, and it's still 30 to 35 points. Stop at the low, targeting the highs, and you still get roughly the same trade, if not higher, if you're looking to target higher. Boom. But yeah, those are the trades for today. Unfortunately, I'm still trying to dial in the mental aspect of trading. So I blew some accounts today because, I don't know, I was looking to go short after this break and I got stopped out. And yeah. Why was I looking to go short? Well, I was looking for price to, tap into NWAG right here. Come on. I was looking for price to tap in here. Whatever, good enough. Tap in here, hit 50%, and then retrace lower, targeting these right here. That's what I was looking at. Of course, that's not what happened, so I got stopped out, and price continued to seek higher. Yeah, now looking back at it, it's a clear draw higher after the bounce off of the 1 hour. I wasn't really paying much attention to the 1 hour this morning, but is what it is. You learn from it. Learn every day. It's all good. You learn every day, and you be better for tomorrow. So I was looking for price to at least come down into this low, maybe this low, because it's kind of a straight shot, and it looked like the market was just continuing to take down. With the overnight, I was looking for 50%, and then a retracement down, continuing the sort of trend downwards, or something like this. But all good. I got stopped out. It's whatevs. This is probably what's going to happen tomorrow or the next day. Only if we don't break this high, right? So if price comes up and rejects off this high and then breaks below NWAG again, then we're for sure going to seek this low right here. But if price comes up, takes out the high, and then we sort of hold this, then we're probably going to seek higher. It all just depends on what price does throughout the day into Asia session overnight. But we're going to keep an eye on it. We're going to try to make the best of our accounts now. I've spent a lot of money on evals lately, and I'm getting kind of tired of it, but that's the name of the game. So right now I'm working with, I have an Express account that I rebought because I'm going to try to trade that back into a payout, because I've just been buying eval after eval. You can see I've just been buying eval after eval. Was this 50, 100, 200, 300, 400, 500, 600, 700, 850? Plus the 500 reactivation right here. 8, 9, 10, 11, 12, 1350, so almost $1,400, $1,500 right here. Yeah, not good. This is all within like the beginning of the month, and it's the 5th on Wednesday, so it's been like 3 days now. Not good, but you know what? We're getting after it. We're learning. We understand which trades we need to take. I think my biggest issue is I'm over leveraging. I'm not really being patient, and I need to just acknowledge the fact that this is a long-term thing, and it's about base hits every day, base hits, and you don't need to strive for $1,000 days. On top of all that, I have some of these quick notes I'd like to share here. It's just, if any of you can read this, props to you, but let me just go over it real quick. So some of the main things are to follow your daily risk, right? If you can follow your risk and accept the loss and move on to tomorrow, that really prevents you from revenge trading or over leveraging, chasing wins, chasing the dollar amount, and blowing your account, which is something I've been doing a lot. I've been blowing my account, over leveraging like 30 to 50 contracts, and yeah, that's why I'm blowing my accounts. To be able to think long term, right? It's not about making $1,000 every day and then you have a 5K week and then you can request a payout. that's all great and all, but if you can maintain consistency and get like a couple $100 a day, right? A couple $100 a day right here. Where is it? $200 a day is $1,000 a week equals $4K a month, right? If you can do that, right? Minus a couple losses, we'll just say it's $3K, $2,500 just by making $200 a day. Give or take a couple $100. Oh, you're good. You're chilling. Right? To preserve your capital and stop buying accounts, right? Just by going for a couple $100 a day, thinking long term, the money will come in as long as you can maintain consistency, follow your strategy, and stop the ego of thinking you're this massive professional trader and just float. But yeah, rule number 1. Daily risk of $200. If you lose it, get off. If you win, cool, get off. Don't matter. Daily risk, follow your rules, get out of there. Follow your strategy. For me, my strategy is on a 5 or 15 minute, looking for a 40-point candle and having your stop at 30 to 35 points. Right, and then you're targeting the draws. Like for instance, right here, this would be a draw, a draw, a draw, and right here, here's a higher time frame draw. But you get the point. And then, yeah, having your stop loss at a reasonable spot that can coincide with your contracts and your dollar amount. Number 3, going for base hits each day equals consistency, which leads to payouts. Base hits each day leads to consistency, which leads to payouts. Right? $200 a day, risking $200, going for a 1-to-1. If you get a 1-to-2 or a 1-to-3, great. But once you're in a trade and you see $200, move your stop to break even so there's no risk. And then, yeah. Number 4, stop chasing the money. Follow your rules and follow your strategy. The money will come as long as you can follow your system. Once you can learn how to do that, then the money will come. But you have to first learn how to listen to yourself, follow the things you say you're going to do, and then stick to the plan. Number 5, whether it's a win or a loss, you're done for the day, right? Because if you're following your system and you're following your daily risk, win or loss, you've already told yourself that's the amount of money you're willing to risk for the day, so therefore you should get off. Right? Don't revenge trade. Don't try to win back the money you've already lost because you're putting more money at risk to lose, and if you're going to lose more money, you're disobeying the rules, and therefore, where's the consistency in that? There is none. Have lost acceptance and come back tomorrow, right? So lock your account, get off, go outside, go make some breakfast, or whatever. Come back tomorrow because the markets aren't leaving, and that'll keep your account alive. So just come back tomorrow and do it again. Number 6, take this seriously. Stop blowing evals and stop spending thousands of dollars on over leveraging, on not following your strategy, and all this good stuff. But again, take it seriously because we're putting in all the effort, learning everything we need to know to what? Buy evals that we're not going to follow the strategy on. Like, come on, that don't make no sense. Just do what you need to do. So stop blowing evals. You know you can do it. Just stop over leveraging. Spend a few weeks on an account. Come on. You can do it. I can do it. Whoever else, they can do it as long as they just put their mind to it. Forget about the money. It's just consistency. Consistency is key. And again, small wins add up. It's not about making money today or tomorrow. It's about stacking base hits every day. So by the time you're a year older, 2 years older, or 5 years older, those base hits will add up, right? So like I said, $200 a day is $4K a month. So 12 times 4 is 48. So basically 50 grand by doing $200 a day. And if you can stack 5 accounts by doing $200 a day, that's $250,000, right? Divide that in half by all your losses, $125,000 just by getting $200 a day. So think about that. Right, follow your risk, follow your plan, and should be good. All right, on that note, I need to get off of this thing because I'm going to get lost in my head and my mind, but hope you enjoyed the trade recap, and yeah, leave a like, subscribe, let me know if there's anything else you want to talk about, any different topics, psychology, mental, strategy, and yeah, on that note, deuces, catch you in tomorrow's recap. Peace.